Welcome. In this video is ZBCN coin price making a bullish pattern. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the chart, we can observe a clearly defined downtrend line that has been dominant for an extended period. This downward slope has historically acted as a resistance during every price attempt to rise, pushing the price back down. However, the current relationship between the price and this descending trend line has reached a noteworthy point. In recent price movements, a structure has formed where the price moved toward and made contact with this trend line. While this may appear to be a standard resistance touch, it actually contains a technically promising structure beneath the surface. This contact shows that the price is now respecting this trend line and acknowledging it as a significant technical level. Such behavior is often typical before trend breakouts. The most recent touch of the price to this downtrend line carries a different energy compared to previous contacts. This time, the price not only touched the trend line but also showed significant resistance against sellers in this area, with the pullback remaining limited. This may be considered one of the first signs that sellers are losing strength and buyers are gaining confidence. In technical analysis, repeated touches to a downtrend line usually indicate that the trend is weakening and may eventually break. The current chart strongly supports this possibility. At this stage, another approach of the price toward this downtrend and an attempt to break above it would be a highly positive technical development. If this trend is broken to the upside, not only will the immediate resistance be overcome, but a critical shift in price structure will also begin. Trend lines are areas where investor psychology becomes tangible. A breakout above this line could lead many investors to believe that the downtrend is over. Once this psychological threshold is crossed, a wave of buying may quickly follow. A break of a downtrend is often one of the strongest technical signals that the market direction is changing. After such a breakout, prices typically gain upward momentum, often supported by strong volume. If the price breaks above the downtrend and establishes itself above the line, the probability of a new upward wave beginning is quite high. These kinds of breakouts attract not only short-term traders, but also medium and long-term investors, as they provide important opportunities both technically and strategically. Additionally, it is common for the price to return to the broken trend line briefly and then rise again. In technical analysis, this is known as a breakout retest structure. In this pattern, the price tests the broken downtrend as support and then moves to higher levels with the reaction it receives. If such a development occurs in the current scenario, it would indicate that the trend reversal is happening in a healthy manner and that the foundations of a new uptrend are being laid. If the uptrend begins, the price is expected to initially move toward levels that previously acted as resistance. These levels are technically targeted zones and are also psychologically significant, as they are areas where investors previously chose to take profits. However, this time, since the price has gained strength by breaking the downtrend, the chances of surpassing these resistance levels become higher. Once a trend is broken, a new momentum often forms in the market, supporting the continuation of the upward move. But of course, we can't rely on trend analysis alone. Let's also take a look at other metrics. Stay tuned. When we carefully examine the chart, it becomes clear that recent price movements are beginning to form a highly meaningful pattern. In particular, the structure taking shape points to the inverse head and shoulders formation, which is known in technical analysis literature as a strong reversal pattern. This formation is typically considered one of the clearest signals that a downtrend is coming to an end and a new uptrend is about to begin. Currently, the price is in the final and most critical phase of this formation, the right shoulder development. This phase is one of the most closely watched and carefully monitored by investors seeking confirmation of the pattern. The inverse head and shoulders formation consists of three main parts: the left shoulder, the head, and the right shoulder. In the left shoulder, a price decline is followed by a brief upward reaction, while in the head, the price forms a new low. This drop is often viewed as the final intense wave of selling pressure in the market. The subsequent rise is generally stronger and accompanied by higher volume. As the price begins to form the right shoulder, it is a positive sign if the price finds support above the previous low and begins to move upward. This indicates that selling pressure is starting to lose strength and buyers are beginning to take control of the market. Looking at the current technical structure, we can observe that the price has entered the process of forming the right shoulder. This suggests that the pattern is nearing completion and approaching its critical breakout point. The formation of the right shoulder reflects a search for equilibrium in the market and signals that the downtrend is nearing its end. At this stage, An upward move toward the neckline would be a strong signal that the pattern is starting to activate. In these types of reversal patterns, the breakout that follows the completion of the right shoulder often marks the beginning of an aggressive upward move. One of the most important technical features of the inverse head and shoulders formation is that the price target after the breakout can be clearly defined. According to technical analysis rules, this target is calculated by measuring the distance from the lowest point of the head to the neckline and adding that distance to the breakout point. In this case, if the price successfully breaks above the neckline, the target level would be the depth of the head added on top of the neckline. This offers a clear and achievable price level for investors. Especially in such formations, price often tends to reach this target area with strong volume in a short period. The alignment of all these technical signals and the healthy development of the formation increase investor confidence and provide long trades with a higher profit potential. At this point, particular attention should be paid to any potential attempt to break the neckline and whether the price can move above this level. If the price succeeds in moving above the neckline, the pattern is confirmed, and the path for upward movement is significantly opened. This would be a technical confirmation that a new trend has begun and that the direction is now upward. During the current period where the price is forming the right shoulder, the psychological environment in the market is also highly critical. This phase represents a time when investors begin to ask, was that the bottom? And when bullish confidence starts to return? The positive appearance of the formation from a technical perspective contributes to a constructive shift in investor psychology. This positive sentiment can add upward momentum to price action. One of the most notable technical indicators on the chart, the MACD, is one of the most frequently used oscillators by investors to better understand market direction, momentum strength, and potential reversal signals. This indicator, which delivers highly accurate results, particularly in identifying short and medium-term trend changes, has now produced a critical and positive signal in our current analysis. On the present chart, a bullish crossover has occurred just below the zero line between the MACD line and the signal line. These types of crossovers are often considered one of the first strong signals that a bullish trend may be beginning. This positive crossover below the zero level is significant both technically and psychologically. When the MACD crosses upward below zero, it indicates that there was strong selling pressure earlier, but now buyers are starting to step in, and the trend is gradually beginning to shift upward. This crossover often suggests that a downtrend may be coming to an end, and that the seeds of a new uptrend are being planted. In other words, this signal shows that a valuable opportunity window may be opening for investors. When the MACD line crosses the signal line from below, especially when this occurs below the zero level, it typically signals a stronger potential upward move. This suggests that the current downtrend is losing momentum, and the likelihood of a trend reversal is increasing. In technical analysis, such signals are usually interpreted as early warning signs before an uptrend, and experienced investors often reassess their positions and shift toward bullish strategies after such crossovers. It is important to monitor these crossovers closely. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.